Welcome back. Let's talk about some stocks which are buzzing around right now. At the high point of trade is Tata Consumer. Remember, all of last week it was a little volatile. There was news about a big impending acquisition, etc. Asian Paints is the other one which is doing well, and that's counterintuitive given the rise that we've seen in crude prices over the last couple of trading sessions. But despite that, we're seeing a bit of an up move out there. But in the consumer space itself, we have DFM Foods, which is buzzing around, and this despite the company receiving an order from the DGGST. What is the claim of the DGGST? They're saying that the company has been misclassifying its products, and as a result of which they're paying less GST than they're supposed to, and as a result of which the differential that they're supposed to pay is close to around 101 odd crore rupees, and on top of that there has been a 101 crore penalty which has been levied. But on its part, the company says that they don't expect any financial implication basis advice from their advocates, and that they're not misclassifying that. In fact, they've gone ahead and suggested that they will appeal against this order itself. So as a result of which, we aren't seeing a big downtake on the stock already. But remember, the other trigger for the stock, of course, is the voluntary delisting that was announced at a revised offer price of around 264 odd rupees. And as a stock itself, you know, DFM Foods hasn't moved virtually in the last 5 years or so. Today, the stock is up 1.3%. If you looked at it, the last 5 years, the stock has seen volatile runs, but point-to-point comparison, it's up just around 1 odd percent. So today's move and the GST thing has not much to do with it, as the voluntary delisting has with DFM Foods.
Okay, so that is the update on DFM Foods. The stock up around 1.5%. But the other stock that is doing well is Manappuram Financial. It is on our radar on the back of their November business update. Abhishek Kothari is joining us with all those details. Abhishek.
Well, to begin with, the November business update of Manappuram Finance did mention that they had a monthly disbursements of 4,500 crore, which is a decline of more than 14% on a month-on-month basis. So in last 7 quarters, this is the highest rate of decline that you are seeing. But on the positive side, the collection efficiency was robust, coming in at 96% when compared to 91% in the previous month. The gross NPA ratio has remained stable at around 7% level for November when compared to 7% in October, and this compares to about 6.7% for the month of September. In that, the stage 2 or the loans due between 60 days to 90 days has actually seen an improvement on month-on-month basis. So analysts remain bullish on the stock. CLSA has written a note on Manappuram Finance. They have a buy recommendation and a target price of 260 per share. They say that the disbursal tractions remained healthy and collections were strong. The stage 2 has improved, with stage 3 loans remaining stable. So management expects both to improve in the month of December or by Q3 FY23 due to seasonality. The only negative surprise which CLSA mentioned could be on the net interest margin or on the operating expenses side. Morgan Stanley has also written a note on Manappuram Finance with an overweight rating and a target price of 275 per share. They say that disbursements and collections have remained strong in November, aided by the fact that there were macro tailwinds which the management has highlighted. So collection efficiency in the month of November rose both month-on-month and year-on-year, and with asset quality remaining stable, they remain positive on the stock. Back to you.
All right, Abhishek, thanks a lot for that. That's about Manappuram Financial up 6%. But you've also got a Morgan Stanley note which has initiated coverage on gold finance companies.
Well, as you mentioned, Morgan Stanley has initiated on Manappuram as well as Muthoot Finance. So for Manappuram, they have an overweight rating with a target price of 150 per share, which is an increase of about 25.6% compared to Friday's closing price. And they have initiated on Muthoot Finance with an equal weight rating, a target price of 1,150, which is an upside of 1.25% compared to Friday's closing price. They say that gold lending business has been very good, with a super normal ROE but low growth, given the fact that there is competition from the banks. So diversification is the way out. Manappuram looks better positioned than Muthoot Finance due to cyclicality and structurally. They believe that valuation multiples are also attractive for Manappuram. Back to you.
All right, that is all the update from the financial space.